So holding companies, what exactly is a holding company? Why would you use one? What are the benefits? What are the disadvantages? My name is Andrew Wall, and I'm the managing partner here at CPA for IT. So let me start with the disadvantages, because again, they're small and they're similar to the disadvantages of a prac. You've got costs of setting it up and maintaining it. That's your real disadvantage, right? So you're basically, doubling your accounting fees and services associated with that. But there are some big advantages to a holding company. There's some limited liability because we're able to move money out of an operating company into a holding company. So the risks of the operating company are sheltered from the assets of the holding company. That's usually one of the big advantages that you get, but it's a non-financial advantage. So really, the reason you're going to set up a holding company is once you start to receive some actual financial benefits that exceed your non-financial benefits. First and foremost, what you're allowed to do is move money from your operating company to your holding company tax-free through the use of dividends. So you can get these tax-free dividends that you're moving up and moving out of your operating company into your holding company. That's where we get that sort of asset protection. And this is important from the lifetime capital gains exemption, because remember I said there's a whole bunch of if, buts, maybes. Is one of the requirements. Another requirement of the lifetime capital gains exemption is that 90% of the revenue has to come from operating business. So if you've got a whole bunch of investments mixed in with your operations, that could potentially void your capital gains exemption. So moving out and sheltering those investments into another company and having a holding company that does your investments and an operating company that does your operations will ensure that you can keep that lifetime capital gains exemption. So that's a financial benefit there. The other financial benefit that you're going to get is, as I mentioned earlier, the tax rate on non-operating income is higher than it is for the small business deduction limit. So if you have what we call passive or investment income, that's taxed at a much higher rate than your operating income. And when that's all intermingled into one company, you've got a little bit of room being able to deduct the management fees against that investment income. But things like deducting your salary against that is not going to work unless you've wiped out all of your operating income. So what CRA basically says is, if you want to apply other expenses that aren't directly related to the investments against that investment income, then you have to first have wiped out all of the operating income with those expenses. Then and only then will it be applied against the higher taxed income. But when we separate out the two, and we've got a holding company over here and an operating company over here, what that allows us to do is, we would of course have your normal expenses related to the management fees, and if it's an investment property, all the costs that go along with that. But in addition, you can draw a salary from this corporation, potentially wiping that investment income down to zero. And so you're not paying any tax at the high rate. Now, because you've taken your salary over here and you're not taking it over here, that basically means this operating company has more income because it doesn't have an expense, your salary, that's reducing the taxable income. So it's got more income and it's paying, it's going to have more tax, but it's more tax at a lower rate. So it becomes tax effective. And generally speaking, once you have probably about $100,000 to $200,000 of investable assets, this is where a holding company is really going to start to reap some financial benefits. So again, if you're building up money inside of PREC and it's starting to grow, you want to reach out, connect with your account manager or your accountant, your financial professional, and say, hey, does it make sense for me to have a holding company? Is this something we should start talking about now? And again, do you want to get those wheels rolling and those planning going? Because depending upon how it's done, we might want to do some complex tax planning and tax structuring where we'll bring in other financial professionals like tax lawyers and stuff like that. So, there are different areas where we bring in other accountants who have expertise in different areas. And when it comes to hiring an accountant, it's very much like hiring a doctor. You want to find someone who's an expert in what you're doing. So you don't go to a foot doctor when you're having chest pains, right? You want to go to a specialist. So like for these precs, we're specialists in this. We've been doing service-based businesses for decades. We know all the tax maneuvers. We know all the tax strategies. But when it comes to corporate restructures and some other things, we'll bring in tax lawyers, and we have teams of tax lawyers. We'll also bring in, insurance agents and, specialists in IPPs and, all the different team of advisors that we need, people who specialize in shred. We've, spent, over 30 years building up a team of resources designed to assist people just like you and make sure that you're getting the fullest and greatest advantages of what I think is a really, really tremendous opportunity for realtors. So if you are on the fence and you still don't know whether it makes sense to set up and incorporate a personal real estate corporation, I do encourage you to book a free consultation with myself or one of my team members. You can go online to our website. We've got a Calendly link, which is really easy. You can find a time that works for your schedule and book it just like that. Get a time to come in, which right now come in is through Zoom. We're doing this all virtually because of COVID. Down the road, it might be in person again, maybe. And of course, if you are ready to go, you can go straight to our website. And as I said earlier, we've got a special discount code for you guys, which is capital P, capital R, capital E, capital C, 20. That's PREC20. And that'll get you 20% off any of our incorporation packages. You can go in there right now, fill in the form, and within 24 hours, we'll be able to get you incorporated.